Brian Belski making several new moves in his monthly portfolio rebalance. Brian, what do you got?
How are you? So listen, we had a great trade in Lulu. We were very lucky, and we bought Lulu and put it in our value portfolio. And it was up 53%. Lulu obviously is not a value stock, but given the fact that the first part of 2024 had massively underperformed, we thought there was an opportunity there. That's how you should manage at least part of value. So guess what is value? Nike. So here's why we're going back into Nike. I've not owned Nike since 2016. I think from an operational perspective, they are completely coming back and rebuilding it. They've brought back an old CEO. I think ultimately they're going to have a new CEO. They're focused on the shoes. They're focused on the product. They're focused on old school stuff. I think that makes a lot of sense, again, from that. With respect to some of the other moves that we made, especially in our small mid-cap, we bought Warner Brothers Discovery. Here's why. Cash, content, and consolidation has been our theme in communication services for 5 years. I think from a streaming perspective, the way that Warner Brothers is breaking apart that company into two sides, it's a little goofy, but at the same time, I think there could be some consolidation play there. Now, onto the exciting stuff. We sold QSR, and then we're funding it for two stocks. Josh's favorite Shake Shack. I got to get on the Josh Brown train. I think Shake Shack is to Gen Zs what Chipotle was to the millennials. I really think that's the play there. And then you like that, Josh?
Who's from Josh?
And then
wait, what's the parallel? What's the parallel?
So think about it. So I've got a couple. I funded a couple millennials colleges, and you know how much money they spent at Chipotle through those years. So I'm guessing that a lot of the Zers are spending a lot of money at Shake Shack after the bars close. But at the end of the day, too, the Gen Zers want experience. They want that type of fun atmosphere, and that's what Shake Shack gives them. Speaking of experiences, spending their money, Chewy, online pet food. We think Gen Zers and millennials are spending a lot of money there.
All right, so we got two oohs from Josh Brown. One was for Nike, one's for Shake Shack.
Can I jump in on
Shake
Nike?
Shack up about 2.5%. Why don't we start with Shake Shack? We were just showing the chart a second ago, about 2.5%. Start there and then go to your ooh on Nike, if you don't mind.
I mean, I'm a long-term shareholder in Shake Shack. I would own it. I would not trade it. I think Brian's going to make money there. Nike's interesting to me. So I can't buy charts like this. But if I were like a value disciplined investor, I would buy the stock. I think it's going to work. Do you know how many times this stock has had negative 3 years in a row share price? Since its history in 1980, I think it came public? Zero. What just went on in the last 3 years has never happened before. An unprecedented horror show for Nike. And on that basis alone, it's probably not enough. So I'll tell you two other things. The CEO is doubling down on athletes, which is what they should have done 2 CEOs ago. That's what they lost. And it's cool again. There's a rapper from London named Central C, and he's all about Nike Tech, which is the performance fleece. Nike Tech sales are taking off. Central C is helping to drive Nike Tech in the culture, in the conversation, and before you know it, you'll see shoe sales come along with the apparel sales, and this might be the worst period of time Nike's ever gone through, coming to an end in 2025.
Yeah, big Central C fan. He and Dave have a great album. Also, Luka Doncic going to the LA Lakers might be another boost for Nike. Very quick before we go, Steph and Jason, some of Brian's buys. Nike, Chewy, Warner Brothers, Discovery, Shake Shack. Quick take from either one of you.
I'd rather buy Deckers, down 21% in the past week. It trades at a 4 multiple-point discount to Nike. I think Nike is fine, but I think you have to wait 2 years to see results. They haven't invested in years, and so it's going to take time. Meanwhile, Deckers has Uggs, they have Hoka's, we were just talking about it. They're growing both those segments double digits, so I think that's the one you want to buy.
Snipe, quick thought?
I'm not really in retail right now for a myriad of reasons, but if I was going to be the name that I like the most, which is a little different than obviously these players, is Walmart.
All right, there we go. Walmart actually hit an all-time high, or a 52-week high yesterday.